डॉक्टर बाबासाहेब आंबेडकर ओपन युनिव्हर्सिटी.
Welcome to Dr. Babasaheb Ambedkar Open University BBA lecture series for the subject of Basics of Accounting. Friends, today we are going to discuss Block 2 Unit 3 Bank Reconciliation Statement. Friends, generally cash is considered as a king in business. To greater control over cash, we generally do all transactions by bank, and bank is generally bank is our custodian. So, bank issue one passbook to the customer. At every interval or period, we have to prepare bank reconciliation statement behind this. In the last session, you have learned that these are the learning objective, the meaning for preparing bank reconciliation statement, various causes for difference, and the method of preparing bank reconciliation statement. Friends, you were taught that which are the objective behind this. So, these are the causes behind the difference. Generally, balance as per bank statement do not agree with the bank balance as per the cash book. So, these are the reason, very important reasons we have discussed in the last session also. Check issued but not presented for payment, check paid into the bank but yet not credited, and interest allowed by the bank. So, certain transactions which are happen in the bank generally are not recorded directly in cash book, and that is why one need to reconcile between bank balance and balance as per cash book. Friends, these are the main reasons. Before starting the practical questions in detail, let us go over them again. What are the main reasons? Interest and bank charges debited by bank, interest and dividend collected by the bank, direct payment by the bank, direct payment into the bank account by a customer, and error committed by the bank. So, these are the main reason. Need for bank reconciliation statement you were taught in the last session. It reflects the actual bank balance position, because without actual bank balance we cannot issue a further check, we cannot do some further transactions. So, that is why bank balance position is very important to know. It helps to detect any mistake if it is done by us or by bank. It prevents fraud in the recording. As I said that in the era of cyber crime, right, one must aware about the transactions happen in the bank. It explains any delay in the collection of checks. So, that also we can make out that what are the reason behind the late collection. Basically, method for preparation, generally we have a two method: bank reconciliation statement without adjustment and bank reconciliation statement with adjustment. With adjustment means if any error occurred in the transactions, then we can rectify. Friends, generally these are two main things. Whenever bank reconciliation statement is prepared without making the adjustment for the cash book, the bank reconciliation statement is called bank reconciliation statement without adjustment. And if it is made with some changes, means if errors are rectified and we prepare bank reconciliation statement, that is called with adjustment. Bank reconciliation statement without adjustment, what I taught in the last session, generally favorable and unfavorable balance is very important. If we have started with favorable, then addition and deduction is done as per the rule which we are going to discuss today. When the cash book shows a debit balance of the bank or passbook shows a credit balance, it is known as a favorable balance, wherein the deposits are comparatively more than the withdrawals, right. So, that is a favorable. When the cash book has a credit balance or the passbook has a debit balance, it is termed as unfavorable balance. And friends, if it is unfavorable balance, means it is called bank overdraft. And in case of bank overdraft, I said that if you start with bank overdraft, whatever the rules we have learnt, right, that we have to make it reverse entry. Finding the balance as per cash book or as per passbook is the first step in bank reconciliation. It is the starting point of reconciliation process. There are 4 different points for preparing bank reconciliation statement: debit balance as per cash book, which is called favorable; credit balance as per passbook, which is called favorable; credit balance as per cash book, which is called unfavorable; debit balance as per passbook, which is also called unfavorable. This is very important. In the last session also we emphasize more on cash book column. Generally we know that which are the transactions generally we add or deduct. The main transactions are relating to check issued but not presented, that we have to add. But friends, in this session we will emphasize more on overdraft also. If we have started with overdraft, then whatever the transactions, suppose if it is added, it should be deducted; if it is minus, it should be plus. So generally check deposited but not credited by the bank. So if it is a overdraft, it should be added because it will reduce your overdraft. So your starting point is important, whether it is a cash balance, cash book bank balance, or as per cash book overdraft. So if it is a overdraft, understand the effect. Income directly collected and credited by bank, so then we have to add. But wait, if it is a overdraft as per cash book, we have to reduce it, we have to deduct it, we have to minus it. Expenses directly paid and debited by bank, so we have to reduce it from our bank balance. But wait, if it is a overdraft, we have to add it. Bills discounted and dishonored, if it is dishonored, of course our bank balance will be reduced, but if it is as per overdraft, we have to add it, because ultimately overdraft is there and bank has again debited some amount, so we have to add it, because ultimately minus minus, if it is a addition, it should be minus only. Bank charges debited by bank not entered in a cash book, if it is not entered in a cash book, then we have to minus it, because bank has immediately whatever the transactions charges bank, if it is debited by bank, it should be debited from cash book. But wait, if it is a overdraft, we have to add it. See, this is logical, because we have already minus amount, and if charges are there, we cannot add it, otherwise it will reduce the minus amount. So ultimately reduction in charges, if it is overdraft, means we have to add it. Interest credited by bank not entered in the cash book, so of course we have to add it, and vice versa, we have to less it. Friends, this is as per cash book, but sometime it happens that you can start your bank reconciliation statement with passbook also. If you will start with passbook, then you will end with balance as per cash book, and if you will start with balance as per cash book, you will end balance as per passbook. So generally in business, cash book is our own subsidiary book, so we know all the transactions what we have recorded in cash book. So sometime it is general tradition to start with cash book balance, either it is a bank balance or bank overdraft. So these are the effect. Generally it should be the mirror effect, what I told you, okay, if it is a less here as per passbook, it should be added. So friends, these are the basic rules. We have gone through with the various situation, various transactions which create differences between cash and bank balance, but ultimately the actual practical bank reconciliation statement what we prepare is important. Friends, when bank overdraft as per the cash book is given, in the last session we have discussed about the various situation when bank balance as per cash book is given, but when overdraft is given, if we start reconciliation statement with bank overdraft as per the cash book, then we are to ascertain the impact of each item causing difference on overdraft, right? See, this is very important. Generally the effect of bank balance whatever may be will be the reverse effect if we start with bank overdraft. In other words, we will have to see whether a particular item increase the overdraft as per the passbook or decrease the overdraft as per the passbook. As I have given you example, if bank charge something as a bank service charges, so we have to add in overdraft, because ultimately it reduce the it increase the overdraft, right? So we cannot reduce the overdraft. The items which will increase the passbook overdraft more than the cash book overdraft. So these are the reason: check paid, deposited into bank but not credited. So when it is credited, it will reduce the amount of overdraft. Very logical. Bank made a pay order as per standing instruction, right? So if bank as per the standing instruction ECS, if pay order is received by bank, it will reduce the amount. Bank charges debited in the passbook, not in cash book, if it is debited in the passbook, but we know very well that ultimately if we are writing in the cash book, so we have to add it. Deposited check dishonored, not entered in the cash book. If it is dishonored, ultimately bank balance will be reduced. Bank balance reduced means bank overdraft increase, we have to add it. Interest charge on overdraft not entered in the cash book, then we have to enter it in the cash book. So friends, these are very important transactions. See, when we have learned the transactions effect balance as per cash book, it is the reverse or mirror image of all those transactions effect in a passbook, right? So friends, these are very important things to understand. Logically we should remember and give effect as per the requirement. Now, which are the transactions generally we deduct if we have started with bank overdraft? Friends, generally this is a theoretical concept which I am teaching. At the end, when we will discuss the question, practical question, you will understand that ultimately whether we will start with cash book or passbook, but addition and deduction of transactions are important. The items which will decrease the passbook overdraft more than the cash book overdraft: check issued but not presented for payment. If check are issued but not presented for payment, so it will definitely reduce a bank overdraft. Direct deposit by debtors not recorded in the cash book, so of course it will reduce a bank overdraft, because ultimately balance comes in bank account, that is a positive effect, so it will reduce bank overdraft. Interest on overdraft recorded in cash book, not in passbook. Interest on overdraft recorded in cash book, not in passbook, right? So that is also very important, that it will reduce bank overdraft. Credit side of the cash book is overcast. If credit side, see, this is very logical, credit side of cash book is overcast. If credit side cash book is overcast, it means there would be some amount on debit side. It means bank debit balance is increased, so we have to reduce it, that's why it should be deducted. Bank collected any income not entered in cash book, so if it is not entered in cash book, it will be entered in cash book and will reduce the bank overdraft, right? So these are the very important transactions generally deducted when it is started from overdraft. When bank overdraft as per passbook is given, see, as per passbook is given, so if we start reconciliation statement with bank overdraft, friends, generally we have 4 options. What we have discussed, 2 options favorable, 2 options unfavorable. Unfavorable means bank overdraft either as per cash book or either as per passbook. If we start reconciliation statement with bank overdraft as per the passbook, then we are to ascertain the impact of each item causing difference on cash or bank overdraft. In other words, we will have to see whether a particular item increase the overdraft as per the cash book or decrease as per the cash book. As I said, logical effect also play a vital role when we prepare bank reconciliation statement. See friends, if we have started with bank overdraft, what we have discussed in the last slide, then these are the addition, very logical additions are there. The items which will increase the cash book overdraft more than the passbook overdraft. See, cash book overdraft more than passbook overdraft. So which are the items? Check issued but not presented for payment. So of course it will be added, because ultimately check issued but not presented means will reduce our bank balance, means addition in the overdraft. Direct deposit by debtors not recorded in the cash book. If direct deposit by debtors are given, it means it will increase our bank balance, means addition, which will reduce ultimately the bank overdraft. Interest on overdraft recorded in cash book but not passbook, that is also very common. Credit side of the cash book is overcast. If it is overcast, we have to add it if we have started with the overdraft. So, which are the items should be deducted in bank reconciliation statement if we have started with overdraft? Friends, the items which will decrease the cash book overdraft more than the passbook overdraft. See, generally we compare. In the last session you were taught comparison between two bank balances, bank balance as per cash book, bank balance as per passbook, but here we compare two overdraft as per cash book and overdraft as per passbook. So, these are the reason we have to deduct. Number 1, checks paid deposited into bank but not credited. If it is not credited, there would be some discrepancy, but here we have to deduct it, right, because we have started with bank overdraft. Bank met a pay order as per standing instruction. If we met a pay order, then of course it will reduce the amount, so we have to deduct it. Bank charges debited in the passbook, not in cash book. If it is not written in cash book, it will reduce the amount in cash book, will be deducted, because ultimately bank overdraft is minus, charges are minus. That is why if we will deduct it, it will deduct from that addition amount. Deposited check dishonored, not entered in the cash book, and interest charge on overdraft not entered in cash book. If it is charged on overdraft, ultimately it will reduce bank balance and increase in overdraft, right, but it is minus amount. If we write in a less, ultimately minus will be added in overdraft, right. So, friends, that is also very logical. So, these are main reason which affect bank overdraft. And friends, when we add, in the last slide we have seen that when we add all these things, the reverse of all these things would be when we deduct it from it. So, when we start with bank overdraft, logically it is difficult to remember all the transactions, but I advise you always do bank reconciliation in exam as per cash book, right. And friends, if you know the transaction and effect as per cash book, it is difficult, it is easy to derive it from the for bank overdraft. So, go for a cash book balance and then immediately you can understand the effect of overdraft also. Friends, now the very important things, whatever transactions we discuss as a theory, the theory we believe we call them fact, and the fact we disbelieve we call them theory. This is very important in bank reconciliation statement. So, which are the transactions and how to prepare bank reconciliation statement with some advanced issue. So, let us discuss some of the example, because ultimately bank reconciliation statement is a practical chapter, right. So, let us discuss one question. Number 1, from the following particulars prepare bank reconciliation statement showing the balance as per cash book as on 31st March 2019. Friends, when we prepare bank reconciliation statement, you know the structure. We need 2 columns. One is for particular, where we write generally bank reconciliation statement, right, and the other is amount. Before starting bank reconciliation statement question, read out all the transactions. Sometime it happens that you will be given one balance and you have to match with the other balance, means balance as per cash book is given, you have to find out balance as per passbook. Overdraft as per cash book is given, you have to find out overdraft or balance as per passbook. So, when you start cash balance, bank balance or overdraft, you will end with the balance as per passbook. So, these are the transactions given. Let us prepare bank reconciliation statement. Balance as per passbook rupees 8,000. Balance as per passbook given rupees 8,000. In bank reconciliation statement, as I said, if possible, start with bank balance as per passbook, right, or bank balance as per cash book. So, I have written here bank balance as per passbook. In the earlier session, we have discussed bank balance as per cash book. Now, bank balance as per passbook. Let us understand the given transactions and the effect of such transactions on bank reconciliation statement. Check deposited but not credited by bank rupees 1,000. Check deposited but not credited by bank rupees 1,000. So, friends, see, if you have started with bank column in a cash book, when we have deposited, we immediately credited the amount, right. But now we came to know from all the transactions what we have scanned, that check deposited but not credited by bank rupees 1,000. So, we have started with bank balance as per passbook. So, in passbook balance we have to add this 1,000, because ultimately if it is deposited, bank balance will increase. So, add check deposited but not credited rupees 1,000. So, we have added in balance check deposited but not credited rupees 1,000. Now, the next transaction is checks issued but not presented for payment rupees 500, right. Check issued but not presented for payment. So, when we issue the check, immediately in our cash book we have written on debit side, or we have reduced the amount. So, check issued but not presented. So, still we have to reduce the amount as per passbook. So, from passbook we will deduct check issued but not presented for payment, amount is rupees 500. 500 minus, or we can write in a column also, right. If we will write in bracket in this column, it means it is deducted. The next transaction, check issued to creditors but not recorded in cash book rupees 700. Check issued creditors but not recorded in cash book rupees 700, right. So, this is very important. We have not recorded in a cash book, right, while already from passbook we have deducted this 700. So, check issued but not recorded will be added as per passbook balance. Friend, understand one thing, here we are reconcile this two amount, we are least concerned with the actual effect of it. Our concern is how to find out the difference or the reasons behind these two balances, right. Next is dividend collected by bank not recorded in cash book rupees 100, right. So, dividend collected by bank, but not recorded in cash book. So, there is a plus in a bank passbook, bank balance as per passbook. So, we have to reduce this dividend collected by bank. The reason is we have started with bank balance as per passbook. So, in passbook it is credited, so reduce it rupees 100. And the last transaction is debtors directly deposited into bank not recorded in cash book rupees 2,000, right, directly deposited into bank. So, bank passbook amount is increased, but not recorded in cash book. So, we have to reduce it, right. So, we will reduce rupees 2,000 debtors directly deposited into bank. So, friend, we have scanned all these transactions which create difference between cash book and bank passbook. So, we are given bank balance as per passbook, and we thought as a bank that what would be the effect and the reasons. If it is increase the bank balance, we have given the effect. If it is reduce the bank balance, ultimately we will get bank balance as per cash book. As I said, if you have started with passbook, you have to end with cash book, right. So, ultimately after plus and minus we got 7,100 which is called bank balance as per cash book. So, this is very important friends, that this type of transactions generally we record in bank reconciliation statement. And we have one more question, number 2, prepare a bank reconciliation statement of Manish Traders balance as per cash book, debit balance 28,000. I will write here balance as per cash book 28,000. Let's discuss one or two questions. Number 1, a check deposited into bank rupees 25,000 but not credited by bank till 31st December. So, that 25,000 whatever check we have deposited, we have to reduce it from our bank reconciliation statement. Two checks of 15,000 and 48,000 issued were not presented in the bank for payment, then we have to add it, plus various check 15,000 and 4,800. Bank collected dividend rupees 10,000 not accounted in cash book. If they have collected, bank balance would increase because it is as per cash book friends. The bank paid insurance premium rupees 7,500 and loan EMI rupees 10,000. This is a standing instruction, so it will be deducted, and insurance premium 7,500 is deducted, EMI 10,000 for the standing instruction, right. So, that 10,000 also will be given effect, right, whatever might be. So, these are the certain transactions what we have recorded, and at the end friends you will get balance as per passbook. In the last question we have started with passbook NZ cash book, here we have started with the cash book NZ passbook. So, these are the transaction. Ultimately friends, when you have started bank reconciliation statement, either it is a cash book or passbook, the effect on certain balance, right, what we have already done we should do for the reverse, either it is a cash book or for a passbook. So, ultimately generally for a greater control over cash, bank reconciliation is must at the end of month or at the end of certain period. So, friends, in the block 2 we have discussed the various units, and at last we have discussed bank reconciliation statement also. So, I wish you all the best and happy learning for the remaining things. Thank you very much.